Hi everyone, welcome back to our channel. Today we are diving into some hot topics that are making waves in the economy and tech world. We'll cover the US national debt, Nvidia's growth, trade negotiations between the US and EU, and an exciting new blockchain initiative in Dubai. Let's jump right in. First up, let's talk about the national debt. The United States national debt has now exceeded $36 trillion, which equals a staggering 122% of our GDP. This rapid increase is raising serious concerns about our long-term economic stability. Currently, $27.2 trillion of this debt is held domestically, while nearly $9 trillion is owned by foreign investors, with Japan, China, and the UK leading the pack. Analysts are warning that extending the 2017 tax cuts could add an additional $5 trillion to the deficit. This ballooning debt could lead to higher taxes, increased interest rates, and could crowd out essential public spending. Lawmakers are feeling the pressure to balance fiscal expansion with sustainability, especially with rising geopolitical and economic uncertainties. Now let's shift gears to the tech world and talk about Nvidia. Their remarkable growth is being fueled by massive investments from major tech companies, especially Microsoft, which contributes nearly 19% of Nvidia's annual revenue. In Q4 of 2025, Microsoft allocated 47% of its capital expenditures to Nvidia's AI chips, highlighting their importance in Microsoft's AI strategy. Meta is also in the game, investing 25% of its capex to Nvidia. Nvidia's data center revenue is projected to rise over 74% to $39 billion in Q1 of 2026, showcasing strong momentum despite some anticipated deceleration. Switching gears again, let's talk about trade. The European Union and the United States are ramping up trade negotiations after President Trump decided to delay a planned 50% tariff on EU goods until July 9. This extension was secured through a direct call from EU Commission President Ursula von der Leyen to Trump, aiming to ease the brewing trade conflict. The EU had prepared retaliatory tariffs targeting $23.9 billion worth of American goods, including agricultural exports. Global markets reacted positively to the news, with Europe's Stoxx 600, France's CAC 40, and Germany's DAX all climbing, while US futures jumped, with the Dow up 407 points. However, analysts caution that volatility in global trade is likely to continue. Finally, let's take a look at an exciting development in Dubai. The city has launched Pripco Mint, a blockchain-based real estate platform aiming to tokenize $16 billion worth of property by 2033. Developed in partnership with fintech firm Pripco and backed by the Dubai Land Department, this platform allows fractional ownership with investments starting at just $540. Initially limited to UAE residents, it's expected to open up globally. Operating on the XRP ledger for transparency and efficiency, and regulated by the UAE Central Bank, this project reflects Dubai's ambition to become a global digital finance hub. Over 3,000 users have already registered, showing strong interest in asset tokenization. Now let's take a look at the economic indicators for this week. First up, Durable goods orders fell 6.3% in April, better than the forecasted 7.6% decline, but still a significant pullback. This suggests a cooling in business investment, especially for large-ticket items, and hints at slowing manufacturing demand. Next, consumer confidence came in at 98, blowing past the expected 87.1. That's a strong rebound from April's 85.7. Households are feeling more optimistic, which could boost consumer spending, a key driver of economic growth. Turning to GDP, the economy contracted by 0.2% in Q1. That's less than the 0.3% forecast, but still a sharp reversal from Q4's 2.4% growth. It's a soft landing scenario, not great, but not recession-level bad either. Initial jobless claims rose to 240,000, about the expected 229,000. That suggests some softening in the labor market, possibly early signs of hiring slowdowns or temporary disruptions. In energy, crude oil inventories dropped by 2.8 million barrels, far from the expected 1 million build. This surprise drawdown may indicate stronger demand or supply issues, which could push oil prices higher in the near term. Inflation-wise, the core PCE price index, the Fed's preferred measure, rose 0.1% month-over-month, exactly as expected. Year-over-year, inflation held steady at 2.5%, signaling stable but still above target price growth. Finally, the Chicago PMI dropped to 40.5, well below the expected 45.1. This suggests a significant contraction in business activity in the Midwest, possibly flagging broader weakness in both manufacturing and services. Next week, market attention will be focused on key economic indicators and earnings reports, including S&P Global Manufacturing PMI, month-over-month average hourly earnings, ISM Manufacturing PMI, crude oil inventories, and ADP non-farm employment change. Meanwhile, several major corporations are set to release their earnings reports, including CrowdStrike Holdings, Hewlett-Packard Enterprise, Dollar General, Dollar Tree, Broadcom, Lululemon Athletica, DocuSign, Rubrik, Samsara, and Ciena. That's a wrap on today's topics. What do you think about the national debt, Nvidia's growth, trade negotiations, and Dubai's blockchain initiative? Let us know in the comments below. Don't forget to like, subscribe, and hit that notification bell for more updates. Thanks for watching, and we'll see you next time.